So this was a city-initiated general plan amendment to update the general plan to address three main actions that were caused by other outside agencies. One was the adoption by the Riverside County Airport Land Use Commission of the new airport land use plan for Hemet Ryan Airport. The second was the final alignment of the State Route 79 realignment project by RCTC, and the elimination of redevelopment agencies and associated programs by the state of California. There were also some minor edits and corrections. So essentially, just some brief chronology. We adopted the general plan in 2012, January 2012, and in February, the state legislature ended redevelopment agencies. So there's quite a bit of information in the document about that and in our housing programs, which of course then were defunded. In December 2016, RCTC approved the realignment of Highway 79 and adopted the final EIR. And I know, as some of you know, Councilmember Krupa, it's been a 20-year project that was finally got to that alignment. In February of 2017, Riverside County adopted the Hemet Ryan Airport Land Use Compatibility Plan. We were very involved with that with ALEC in trying to make sure we got the best result for the city of Hemet. And then May 2019, Riverside County ALEC, they required us then to resubmit our general plan for a consistency finding from them, and that was granted on May 9th. So essentially, we're doing three things. We're amending the text, exhibits, and policies of three elements of the general plan. There's the land use element, the circulation element, and the public safety element. The most extensive amendments are in regard to the new airport land use compatibility plan. So here's a map that's in the general plan as well as in the airport plan. That's overlaid onto the city. So essentially there's 6 different zone categories. The large ring around it is what's called the airport influence area. So any new project that's located within that area, we then have to evaluate its consistency with the plan. Each one of the colors has different intensities and different uses that are allowed. The basic Section A and B is really the airport environs, or most of the airport environs itself. And then C has a little bit more flexibility in terms of development. D allows for most new development, and that's where a lot of our vacant land area is. And then E allows for pretty much all land uses, but there are height considerations and requirements in certain places. So it gets quite complicated, but this is the basic plan around the airport. This exhibit, which is also in the plan and in the general plan now, just shows how those zones are created. They're based on noise and they're based on flight patterns of the actual airport. The second component was updating our circulation plan and various texts throughout the land use element and the circulation element regarding the realignment of Highway 79 or future. So what we're showing in this exhibit is the original alignment, which is in kind of that gold tone, and then the new alignment, which is in red, which instead of cutting through that hill, that major hill, actually went around it due to cultural resource considerations. So the advantages of the adoption of the GPA is, one, consistency with other regional plans and programs. It provides greater clarity to developers and to the public and allows the city staff to administer the Hemet Ryan Airport Land Use Compatibility Plan provisions. The benefit of this is it doesn't then require a separate application going to ALEC and a separate hearing and fee to ALEC. So except for legislative items like ordinances and general plan amendments or specific plan amendments, these will all be determined at the staff level as the project's going through its normal process. So there's a lot of streamlining, not only a cost savings, but a lot of times there was a great lead time to get on an ALEC agenda, which would delay the project through the process. We're also keeping the general plan document relevant and up to date, so it is an informational resource and policy guide. CEQA was based on the minor text amendments don't require CEQA review. There were also 3 base environmental documents. One was the original EIR for the 2030 general plan, the final EIR for the realignment of Highway 79, and then the county adopted a negative declaration for the airport land use plan. So our recommended action tonight is for the City Council to adopt the Resolution Bill 19-022, approving the GPA, and direct staff to file the notice of determination for CEQA purposes. So I'd be happy to answer any questions or go into any other detail that you may have.
At this time, I'll open the public hearing. Sarah, do we have any requests to speak? Hearing none, we'll close the public hearing. And do we have any questions from council?
I have comments. 2 comments. Absolutely awesome job. It has gone on for a while, and I want to thank you and Ron Running.
Yes. Ron, this was his project, so it was very
Airport
instrumental.
Land Use Commission and your tenaciousness in finding ways that we could come up with adequate land without putting any of our developable land at risk for the airport was an absolute superb job. And I want to thank you for doing that, and thank you, Deanna, for what you did in keeping everybody to the task. I don't think Airport Land Use Commissioners had ever been through that exercise before, and it came out that this may be the new standard in determining available emergency landing sites for airports. So kudos to both of you, and thank you so much for the great job you've done on this one. Thank you.
Any other comments?
I just wanted to particularly express appreciation for the work that, using your term, streamlining, because I think all too often municipalities in general are accused of taking too long for development, so anything that we can do to expedite that process and streamline is to our community's advantage for development. So I appreciate that.
Great job. Staff, Mr. Running there, taking this project on and doing a superb job as usual.
He was a delight to listen to. Figuring down to square inches of available properties here and here and here and here. It was fantastic.
Okay, if there are any other comments or questions, do we have a motion?
I move to approve recommendation of resolution approving GPA 19-001 as recommended by Ms. Iliano.
Second.
Motion and a second. Please vote. And that motion carries 5-0. Thank you. And you're up next again.
Yes. Let's try that.
Item number 20, Second Amendment to Development Agreement number 04001, McSweeney Farms Specific Plan.
All right. This is the development agreement amendment for McSweeney Farms. A little bit on the project background. McSweeney Farms specific plan was initially approved in 2003 for a total of 1,640 single-family units to be constructed in 3 phases. There's also a commercial site, an elementary school site, neighborhood parks, clubhouse, and pool facility. SunCal was the master developer and installed some of the background infrastructure for Phase 1. However, not all the improvements were completed, and the property went into bankruptcy in 2008 due to the recession. Raintree Investment Corporation purchased the property and took over as the master developer. Currently, all the maps in Phase 1 have been recorded, and 300 homes there are built and occupied. The final maps for Phase 2 have been recorded, and the tentative maps for Phase 3 are currently set to expire in December of 2021 unless extended. So here's the land use plan at the southeast corner of State Street in Dominigoni. And this is the phasing plan. So the dark blue there is the phase 1. That's what's already been constructed. The aqua is phase 2, and the green is phase 3. Aerial showing, you can tell that the developed area in phase 1 and mostly graded in phase 2, and then still undeveloped in 3. So just for a moment, a little bit on the CFD background that was before you a few months ago. This is in order to construct a lot of the major infrastructure. They needed some infrastructure financing, so Raintree had requested the city support the formation of the Community Facilities District to be administered by the California Statewide Communities Development Authority. And the council agreed and adopted the resolution for the formation, and recently approved the funding, construction, and acquisition agreement, which had all the details of the infrastructure and the order of priorities that would be constructed. The CFD has been formed by the state for phases 2 and 3. And the state is now getting ready to sell the first series of bonds, which are anticipated to be about $7 to $9 million. Our engineering department is currently preparing the bid package for that infrastructure. So they're looking to have all those actions coordinate by end of June, beginning of July, so the bond sale could proceed. Okay, so why is that important to what we're talking about tonight? So the development agreement was originally adopted in 2004 and amended in 2014. So the proposed project represents the second amendment to the DA. The development agreement is currently set to expire on December 17th, 2021. So at the time, all of us being very hopeful and that thought that would be a sufficient build-out time, but however, the developers anticipating, especially with the amount of infrastructure that needs to still be constructed, that they need additional time. So they're providing, due to the time frame, and also to provide additional certainty to the home builders to invest in McSweeney, they're requesting an extension of 10 years for the existing development agreement. The provisions in the Second Amendment extend to December 17th, 2031. We all hope it'll build out much sooner than that, but that would give it sufficient time. It extends the tentative track maps within Phase 3 also an additional 10 years. The amendment specifically excludes, however, one tentative track map, 34662, which was 11 large lots that were on two kind of hillside areas internal to the project. In looking at it, staff didn't feel that we could really support that long-term extension because there were some cultural resources that we were aware of, and the developer agreed, and it wasn't their intention to develop that, so that one map is not included in the extension per the agreement. Also clarifies that the MSHCP fees are now applicable to any future development. One thing that RCA and WRCOG, in terms of the TUMP fees, in any of these development agreements, a lot of them originally exempted from future fees, but they've objected to any extensions of time not catching up with those fees. We've also, and this was due to a lot of work on the part of Robert Vestal of our engineering department, really sorted through all the maps and the conditions in the traffic study and identified the breakdown of the fair share fees for each of the tracks. So these were questions that were coming up from the development community as they were looking and doing their due diligence. So so that it was never misplaced any time in the future, we made it as an attachment as part of the agreement, so that it clarifies as to what fees are due and when they're due. So again, overall, this provides certainty to the developer and to the future home builders. So our recommended action tonight is that the council open the public hearing, take any testimony, and then adopt Ordinance Bill 19-026, approving the Second Amendment as recommended unanimously by the Planning Commission. Happy to answer any questions.
Is that public hearing? Sarah, do you have any requests to speak? No. And with that, I'll close the public hearing.
The developer is here if you have any questions. But
does council have any questions regarding this item? Okay.
Council, I just want to clarify that although the staff or the description on your agenda says adopt, it's an ordinance, so it has to go through a first and second reading. So this would be your introduction, read by title only, and wait for the reading.
Okay. Okay.
So I will move that we approve the Second Amendment to Development Agreement number 04001 for McSweeney Farms Specific Plan, ... And we adopt the ordinance, ordinance bill number 19-026 for the first reading. And if you need me to read the whole thing, I will, but.
No, Sarah needs to read it. Sarah will need to read it, but I'll need a second.
I'll second that.
Okay. Sarah? Vote, please.
Technicalities.
Ordinance Bill Number 19-026, an ordinance of the City Council of the City of Hemet, California, approving Development Agreement Amendment Number 19-001 as the Second Amendment to Development Agreement Number 04-001 for the McSweeney Farms project.
Thank you. Okay, with that, we'll
Go on to discussion and action items, fiscal year 2017-18 CAFR, Finance Director Lorena Rocha. Are there any members of the public that wish to speak on this item? We will wait until after you give your report. Okay.
Good evening again, Mayor and Council. Tonight we're here to present to you the fiscal year 2017-2018 annual financial report, otherwise known as the CAFR. And I have with me Mr. Ken Poon from the Poon Group. The Poon Group is the independent audit firm that conducts the audit, and he will be presenting the report to you.
Thank you, Lorena. Good evening, Mayor, member of the City Council. Again, my name is Ken Poon. I'm the managing partner of the Poon Group, and then also the engagement partner of the audit of the City of Hemet, fiscal year end June 30, 2018 financial statement and the related compliance audits too. So what we are going through today is actually walking through the scope of work that the city engaged us to do. There are certain required communications to those charged with governance that we deem the City Council is those charged with governance, so we are required to communicate those matters to you. Going through the audit results, the overview of the financial statement, instead of reading over like 150-page of financial statement, I pick up some of the highlight, giving you the highlight of the financial statement and some. Very importantly, some financial indicator, pension and OPEB information, and open up for questions. So the scope of work. The scope of work divided into three parts. The first part is the financial statement audit, which actually looking at your financial statement from July 1st of 2017 to through all the way up to June 30, 2018. And then because the city also expend more than $750,000 in federal expenditure, so you're required to go through what I call the single audit. That means we are looking at the compliance requirements of the Single Audit Act and making sure that you are in compliance with those laws and regulations regarding your federal program. And last but not least, every year when you adopt the budget, you also approve the appropriation limit. Based on the state law, we are also required to perform and agree upon procedures to look at those like the calculation and making sure that there's no exception noted in your calculations. So a couple of required communications. First of all, I would like to go through the audit responsibility in the next couple of slides. The significant audit findings. We do have a couple audit findings when we conduct our audit, and we'll go through that. Very importantly, you are required to understand your accounting policy and procedures and what kind of estimate that goes into these financial statements, because not all the numbers here are actually cash going out, so it's on a full accrual basis. So there are estimates included in your financial statement. The first part is actually the implementation of GASB statement number 75 for the other post-employment benefit plan. As you recall, almost like 8-9 years ago, there is a new implementation on OPEB regarding the booking the differences of the funding shortage to your financial statement. But this year, in 2018, GASB actually has an update on the OPEB standard. That's require you to fully reconcile and record your other post-employment benefit liability on the face of a financial statement. So that's why you can see there is a significant change in your financial position, kind of move like going to the majority of your financial statement will, like the financial position going into a deficit position, and I can explain that when we get to the slides. We also need to evaluate some estimate that's included in these financial statements, which include the investment fair value, the depreciation on capital asset, and the two big part is the net pension liabilities and the total OPEB liabilities. You also need to take a closer look at Notes 2, because Notes 2 actually describe all the accounting policy that the city adopted through all these years and how you account for your accounting transactions. Note number 9 is the city employees retirement plan, which is your CalPERS plan. Note 10 is the new note disclosure regarding the other post-employment benefit. And Note 15, because of the implementation of GASB statement number 75, we also need to restate the beginning balance of your net position from prior year instead of like instead of booking the whole entire liability for the current during your current year operations. Other responsibility. As management yourself, you are fully responsible for these financial statements. By presenting these financial statements in accordance with generally accepted accounting principle in the United States of America, since the city is a municipal government, so the Government Accounting Standard Board is the standard setting bodies for state local government that the city is actually following those statements. Every year, the city needs to look at all these new GASB pronouncements and making sure that you have proper accounting policy and procedures and implementing those new accounting principles in your financial statement. You also need to adopt sound accounting policy. Very importantly, you need to establish and maintain proper internal controls over financial reporting and compliance. So not only looking at the processes, but you do need to put in like separation of duties, monitoring control to make sure that the numbers presented in these financial statements are properly reflected in the financial statement. You also need to gain public trust, so it's very important that all the amount and disclosure in these financial statements are fully supported by documentation. So either by your own calculation, your reconciliation, third-party invoices, confirmation from third parties. So when we coming out here, we are actually looking at those documents. So you're responsible to provide those evidence supporting to the amount and disclosure in these financial statements. Fair presentation of these financial statements to make sure that they are free from material misstatement, whether due from fraud or errors. And last but not least, you also need to have programs to prevent and detect fraud. So the auditor's responsibility. We are here to conduct the audit using two auditing standard. One is the AICPA auditing standard, which is the generally accepted auditing standard that all auditors apply when they conduct the audit. But since the city has expended more than $750,000 of federal expenditure, we are also required to follow the government auditing standard in conducting your audit on the financials. I'm here to communicate with those charged comments, and tonight I'm here to provide the forum for the City Council to ask me any questions regarding the audit. Also performing the audit risk assessment on internal control over financial reporting and compliance. We also determined the fairness presentation by not only looking at the numbers, but also all the footnote disclosure that is disclosing in the notes to the financial statement. We also rendered the opinion on these financial statements, and if we identify any material weaknesses or significant deficiency in internal control, we also issue a management-led comment, which is included in the single audit report of your, which is part of the single audit report. Let's go through the overview of the financial statement. So the city actually did prepare a comprehensive annual financial report, which is also called a CAFR. So the CAFRs actually have three different sections. The first section is the introductory sections, which there's a transmittal letter, which is prepared by your city managers and your finance director. The city also did get the award from the GFOA in the because you do achieve the Financial Reporting Excellence Award, making sure that all the disclosure are going above and beyond the standard. In order to get the GFOA award, you also need to disclose your organization chart and also disclose all the principal officials at the city level. Our whole focus is in the to perform the audit on the financial section. So the first items under the financial sections is our independent auditor's report, which basically talking about our responsibility, the scope of work that we do, and then also our opinion on these financial statements. Even the second document is what we call the management discussion and analysis, which is a required supplementary information. Even this document is called it's unaudited, but actually did pull the information from the financial statement itself. The city management actually performed an analysis to look at what's going on during the current year, what has happened during the year. So give you a whole entire story instead of just reading through the financial statement as a whole. So by looking at this like a 10-page document, you will be able to understand what's going on at the city during the current fiscal year. The basic financial statement is exactly what we spend most of our time on, which audited the government-wide financial statement. The government-wide financial statement is what I call the consolidated financial statement for the whole entire city as a whole, which on a full accrual basis, so all the total pension and OPEB liability is already recorded on these financial statements. The fund financial statement, which include the general fund, the special revenue fund, the debt service fund, and capital project fund, and then all other, the enterprise fund, internal service fund, those are included in the fund statement. Those funds that you actually, as a council, did adopt the budget on, so that's why they also present fund to fund in these fund financial statement. The notes to the basic financial statement is to actually provide you a lot more detailed information of what's the numbers behind. So, for example, like talking about the financial reporting entity, which is the city of yourself, the summary of accounting policy, the detailed footnote including cash and investment, long-term debt, capital asset, pension, OPEB, contingent liability, and prior period adjustment. Those are some of the most important note disclosure in these financial statements. As required under GASB Statement Number 34, which applied about 17 years ago, there are certain required supplementary information also needs to be disclosed. Couple things: the budget comparison schedule. Very importantly, you can see how you adopt the budget on the general fund and the special revenue fund, and you can see the original budget that you adopt, the final budget, and then compare the final budget to the actual numbers. So that way you can see how well you are doing on your operations during the year. Also, as required by GASB Statement Number 68 and 75 on the pension and OPEB standard, they are also required to accumulate information for you and how these plans coming along, the change in net pension liabilities, the contribution, how is that being done in the last 10 years? Because GASB Statement 68 was implemented about like 4 years ago, so we only have four years of information, and OPEB is our first year, so you only have 1 year of information. But those information are accumulating for the next couple of years. So by the year, like in year 10, so you'll see your trend analysis on these pension liabilities and contributions. And there's the supplementary information, which include a bunch of other non-major funds and other budgetary comparison schedule that did not determined to be a major. Just because the city prepare a comprehensive annual financial report, you also required to prepare a statistical sections. Actually did provide you some great information regarding financial trend. You can see your financials all the way back from 10 years ago to all the way up to 2018. So you can see the trend analysis, the revenue capacity, the debt capacity, some demographic and economic information, and last but not least is your operating information. Very, very detailed information that you can actually reference it back and how you operate as a city in the last 10 years. The single audit report is the compliance report that we issue. We also look at, we need to do two things. One is to issue a report on internal control over financial reporting and compliance. And then also the second report is on the actual compliance requirements that we test on your major federal program. And I'll go through that, which major program that we test during the current year. The schedule of expenditure of federal award is your financial statement for federal expenditure. So basically lists out all the federal expenditure in this schedule. We do have some findings and question costs. So we'll go through the finding and the question costs that we identified during the audit. And last but not least is the summary of the prior year audit finding. In this report, which the city does not have the single audit finding, but you do have some financial statement finding that we have, and it's also included in this report. Let's take a look at the numbers. The government-wide financial statement, as I said earlier, this is the consolidated financial statement, break it down between the governmental activities and the business type activities. The business type activities in here is only like we are talking about one fund, which is your water fund. The governmental activity is actually a consolidated of all the governmental funds plus your internal service fund. So basically they are eliminating journal entries that's being posted. At the end of the day, you see as a one column governmental activities. As of June 30, 2018, the city ended with a total net position of $275 million, of which $317 million is net investment in capital asset, $55 million is restricted net position, resulting a net unrestricted deficit of $96.7 million. As you can tell, after the implementation of the new GASB pronouncement, the pension and the OPEB, that's create a unrestricted deficit for the city. So we can actually take a look at the numbers later when I talk about the pension and OPEB information, and that is a major impact to your, that's impacting as a result to your unrestricted deficit position of about like $96.7 million. The operating, for your operations, this is for the whole entire fiscal year operations. So total expenses is about like $84 million. Net of program revenue. What I define on program revenues are charges for service that you can actually charge the user for a fee, or either you can actually get grants to pay for it. Either the state grant, federal grant, or other local grants, add it all up to be about like $33 million. Resulting in net cost of service of about like $51 million. The general revenue, majority your tax revenue and your investment earning, added all up is about like $44 million. So at the end of the day, for the fiscal year, you have a total loss of close to $7 million. The general fund is the main operating fund of the city, so we will also like to pull that out and talk a little bit about it. At the end of June 30, 2018, the city has a total fund balance of about like $16.7 million. As you can tell, there are about like $7.9 million restricted, of which there's about like $6.9 million is restricted for the Measure U money. Other committed money is really for your contingency reserve of about like $8.2 million. Another sum assigned fund balance of $220,000, resulting the unassigned for $256,000. So the operations for the general fund is actually improved because of the Measure U coming into play. So total revenue is about like $50 million for the current year, and total expenditure, including the capital outlay, which is the amount that you spend for infrastructure, equipment, $46.5 million. And there are some net transfer from other funds of $256,000. So there is an increase in your fund balance of $3.8 million to your general fund, added to your general fund balance. Some key financial indicator, pension and OPEB information. One of the things that we also look at is take a look at the whole entire city as a whole, especially in your governmental activities, because your governmental activities really subsidized by should be supported by your tax revenue. So one of the things that we look at is determine what is the net cost of service for your governmental activities. We just ignore the enterprise fund, because enterprise fund you can actually increase your fee to pay for the service. But we would like to take a closer look at the governmental activities, because you have a limitation on increasing your tax revenue. So that we would like to pay more attention to this number. Total expenses for all your governmental activities is about like $72 million. Net of program revenue, which I determined either you can charge the user for a fee or it is supported by grants, $22 million. So the net cost of service for the governmental activity is about like $49 million. The tax revenue is only $43 million. So basically your ratio, every dollar that you raise, your cost is about like $1.15. So basically, to me, this is very concerning, because you're operating at a deficit. And I can tell in the last couple of years, your number is actually in a deficit position. This is also what I call the structural deficit. The general fund reserve. We also look at the available fund balance that the city can use, but we also exclude the Measure U money, which is restricted. So the committed $8.2 million, adding all the assigned and assigned, so totaling is about like $8.7 million. So total annual expenditure for the city, the general fund, is about like close to $47 million. So which gives you a reserve ratio of about like 18.73%. It is a good ratio as of this point, but I would like to say that given the current economy, this ratio is only about like a little bit over 2 months. I highly recommend to the city to have a ratio of about like 25%, which is 3 months, up to 3 months. So just in case something happened to the city will have money to pay for your operations. The next couple slides is I would like to pay more attention to your pension liability. As you can tell, pension and OPEB is purely an actuarial estimate, and these numbers is actually based on a discount rate of 7.15%. As of June 30, 2018, using a 7.15% valuation, the total liability, which is recorded on your face of a financial statement, is close to it's approximately $97 million. The discount rate that the actuary use is all determined based on the expected long-term rate of return from your pension plan investment. So CalPERS been using the 7.15, which I consider is a little aggressive. So that's why GASB actually provides some great information to have the sensitivity analysis. What if the discount rate change by 1%, either plus 1% or minus 1%, there's a big difference in your pension liability. So the sensitivity, if the discount rate dropped by 1%, that means your expected rate of return did not meet the 7.15%. Your net pension liability can go all the way up to $138 million, which add another $40 million of deficit to your financial statement. The other way around, when we actually, if the economy is actually going great, and the investment rate of return can get to 8.15%, your liability can drop it down to $63 million. Same thing as OPEB liability, but I can tell even your OPEB liability at 6.25% is pretty aggressive. The discount rate, at the end of the day, at June 30, 2018, the net OPEB liability was about like $47 million. The funded ratio is about 2.21%, because I remember in the city actually start funding your other post-employment benefits, setting aside your money to an irrevocable trust, but it's only a small dollar amount comparatively to your total OPEB liability. So if the discount rate dropped by 1%, the liability can go all the way up to $52 million, and then the other way around, so the liability can drop to $43 million. The single audit report, which is the federal expenditure, the city has expended more than basically $979,000 of federal expenditure. Our major program, the biggest program that the city has is your CDBG, so which is about like $555,000. So which we test about like 56%, which already cover, which is under the uniform guidance. The city already, like by testing that one program, we already met the coverage ratio. The audit results, we did issue an unmodified opinions on the financial statement. That means the financial statement are fairly presented in all material respect. The significant accounting policy have been consistently applied. The estimates are reasonable, and the disclosure are properly reflected in the financial statement. Also, at the same time, regarding your single audit, which is the federal expenditure compliance requirements audit. So we also find that the city complied in all material respect with the compliance requirements that could have a direct and material effects on its major federal program. Other results, we do not have any disagreement with management. However, we did identify a couple internal control issues over financial reporting. We do have 2 material weaknesses and 1 significant deficiency that we identified. We did not have any accounting issues. There's no irregularities that we identify, and also there's no exceptions to the agreed upon procedures that we perform on the recalculation on your appropriation limit. A couple of the other findings that we have, one is really, like, a couple of them is really the control environments that we have concern. First off is the accounting policy and procedures. The city does not have a comprehensive accounting policy and procedures in place, so it seems to be a material weaknesses to us because it's a guiding principle for your accountants to perform their work. So we highly recommend the city to compile a comprehensive accounting policy and procedures and get to the city councils to adopt it so that your staff have a guiding principle when they perform their accounting work in your finance department. Second is your finance department organization here. During the year, we identified there's quite a lot of turnovers in your finance team, and then also there are a couple vacancies in your finance organization. That's actually caused some delay in issuing these financial statements. There are lack of, and also that's caused the third one, the internal control over journal entries, because there is not enough bodies within your finance department. We do have issues when we look at the journal entries. There's not a lot of approval process happening when people when your accounting staff prepare journal entries. Those are high-risk area that we look at and making sure that these financial statements are fairly presented in all material respect. So that's why in order for us as the auditor to come around and audit your financial statement and give you an unmodified opinion, we need to test a whole lot more transactions to make sure that we are comfortable with all the entries that is going into your financial system in order to come up with these financial statements. So that's conclude my presentation, and I'm more than happy to answer any questions that you may have.
Sarah, are there any members of the public that wish to speak on this item?
Yes. One member of the public, Pat Gregory.
Ms. Gregory?
Good evening. First of all, I have to say I'm a little bit disappointed by the presentation of Mr. Fu. He mentioned the certificate for excellence in financial reporting. Here's the facts on that if you actually read it. There is no certificate for excellence for the past year for 2017 for 2018. The certificate for excellence that they're referring to is for the time period ending 2017. So I think it's a misdirection to even mention that certificate for excellence. As a matter of fact, the finance director admitted in her March 29th letter that this year HEMET is not submitting their financial documents for review and consideration. So cross out that issue of a certificate of excellence. I just thought that was misrepresented in this presentation. Next, I'm not going to have enough time to list all my concerns, so I'm going to start with the punchline. There is no way that this audit is acceptable. The March 29th letter from the finance directors to the citizen states, as management, we assert to the best of our knowledge and belief, this financial report is complete and reliable in all material respects. So I challenge every single city manager and the city council, the interim city manager, the finance director, that you have an ethical, a moral, and perhaps a legal obligation to represent the true financial picture of the city of Hemet. This audit does no such thing. The auditor's there are actually two sets of confusing documents within this audit. There's management discussion provides a discussion which I understand is unaudited, but they provide financial statements that are unaudited. And here's the problem. The financial unaudited statements that are presented by the city of Hemet show revenues of $7 million for Measure U. I can't make this stuff up. The audited portion says there may be about $11 million, but they don't break it down. And I thought that $11 million was mandated to be identified in the audit, and it's not. There's another example. The unaudited net position of government activities is reduced by $5 million. In the audited set of documents, it's reduced by $95 million. Now, these variations are huge. There's also a difference in the general fund.
I'll give you 30 more seconds.
Okay. They misrepresented the position of the general fund. The unaudited management statements say that there is a $5 million deficit, yet this position, because of Measure U, makes us look like we're much better off than we are. I think it's a misrepresentation of the facts, and I don't think you should accept it, and it needs to be clear to the citizens what you're actually doing. How can you do next year's budget if you had no clue what's going on last year? Thank you.
Do you think it'd be wise to listen to the rest of what she has to say if she has more issues?
Wasn't sure. Well,
You can ask her, but I have no idea.
is there anybody from council that wishes to speak?
I do. Is there anybody in the public that would like to give Pat their 3 minutes? Raise your hand so that she can finish talking. Everybody has 3 minutes right now. She can have mine. If there's issues, then we need to know about them, especially in this instance.
Well, is there a response from the auditor about her claim about the certificate of excellence?
The certificate of achievement in excellence financial reporting doesn't mean that you are in a good financial health. It's actually it's a matter of fact the GFOA, the Government Finance Officers Association, actually do have the award program to make sure that these financial statements are transparent. And this award is actually going back to 2017, and that's why you got the certificate for your last year. When you prepare the comprehensive annual financial report, you are required to put it in the letter of, in the introductory sections, because you do actually get the award for your last year financials.
To add to that, the award that's in there is for the 16-17 year. We can't submit for an award until the financials are complete. So now that the 17-18 financials are complete, we've submitted them for the 17-18 award. And that process takes at least 6 months. So we won't know for 6 months if our 17-18 capper qualified or received the award for excellence. And if it does, it would be presented in the 18-19 capper. So it's always a year delayed.
Okay. So you are submitting it?
Yes, we have submitted it. It's already been done.
The letter that you sent on March 29th said you were not submitting it. So which is it?
That may be a mistake. We did submit.
Okay, in your letter, you said you did not.
I understand, but we did submit.
Well, which is it? I mean, come on. You also stated that, I mean, it's true that the 17... All right, I'm sorry. I just want to get this certificate issue clear.
Wrap it up in about a minute, please.
No, I can't. So, you know what? I'll just send it all to you.
Okay, thanks.
Send it to the newspaper. Let them hear it.
Being that we just got this Friday afternoon, I don't know what you think that we are going to do today, but I'm so glad that you want somebody who's actually read through it and spent time to shut them down. That's awesome. Wait a minute, what did our auditor say? We don't include the public? Not this auditor, the state. Maybe they have a point.
Well, thank you for your statement.
Yeah, no problem.
So, and with that, I do agree. When we get these things on a Thursday late afternoon,
It was Friday morning.
or Friday, excuse me, no one's at the city on Friday, and then we are expected to draw an opinion or have things prepared for tonight. I think it's unreasonable to ask that in such a short period of time. I'd like an opinion of the rest of council.
Well, I certainly agree that it's an awful lot of very detailed data to try to digest in a short period of time. I don't know that what contributed to the time frame issue, but I certainly concur that, you know, something as critical as our audit should be given an appropriate amount of time to digest and come up with cogent comments and questions.
Yeah, and I'll go ahead and take responsibility for that. I was holding up the agenda. The agenda would have ordinarily been posted on Thursday. I was working on a staff report. I didn't get finished till Friday, so I take responsibility for that one.
I have a question as far as the findings. Are the findings listed in the audit report? I didn't see them.
Yes, actually, in the single audit report that we issued on page starting on page 9 all the way to page 12, which is the current year findings. We also listed in the on page 9, which is the financial statement, the types of report that we issue. We also talk about the which findings determined to be a material weaknesses or which finding that we determined to be significant deficiency. We are more than happy to say that on the federal grant, we did not have any findings relating to your CDBG grant compliance. So that's why under the federal award that we did not identify any material weaknesses or significant deficiency, and we are issuing an unmodified opinion on your major federal program, which is the CDBG program. And then also starting on page 10, 2018-001, we have all the detail, the criteria, the condition that we find, and then also the causes to the problem. So we actually did list out very detailed on page 10 on accounting policy and procedures, page 11 on the city's finance organization, and then page 12 on the internal controls over journal entries process. So those are very, very comprehensive in terms of how we draft out our findings.
I'm looking for that in the document that I have here.
Sure.
So, I mean, I see page 10, and it is.
It's not in the agenda, it's in the handouts.
It's this report, not the big report.
Maybe you could email me that.
Sure.
I will email.
I have a question. What's our legal obligation in dealing with this tonight?
This is just on for receive and file. If you have questions about it, then you won't receive it tonight. You'll bring it back at a regular date or another date for you to ask the questions of your finance director and your auditor.
So do I have to make a motion to do that, or can we just provide direction?
You would provide direction because you're not going to make a motion to receive it.
Then let's do that. Let's provide direction to bring it back after we've had a chance to go over all of it.
I agree.
And
So,
could I ask a
sure.
question of my colleagues on council? Is there an interest in having a document? Pat Gregory has gone through this, has questions and comments. Is there value added to our review and discussion if she would be willing to provide a copy of her document review?
I would think so.
Councilor Knapp?
Agreeable to that?
Absolutely. Okay.
Thank you.
So the direction is bring this back after we've had some time to digest it and come up with our own questions and concerns that we have, and go from there. So there's no motion we need on this, except that Ms. Gregory will, in addition, Ms. Gregory will add her comments, or provide her comments or her findings to us. Email, if you would, please.
Yes. No motion. You've given direction to the city manager, and you've invited a member of the public to provide her concerns. You would only have a motion if you were rejecting this. You're not rejecting it. You're deferring it, so you have time to read it and formulate questions.
And if I might suggest, if you would email your comments to the city attorney, that way city attorney can distribute.
Sure.
And city manager?
Oh, yeah. Great idea.
City manager?
Sure.
Okay.
And they'll distribute it to us. Sure. Okay. Thank you.
Just trying to avoid a Brown Act concern.
That's true.
Wasn't trying to bypass our city manager.
Okay.
Could we get the questions ahead of time so we can make sure that we have the answers that you need to them?
Absolutely.
Okay.
So, Council, how much time do you think you'll need to digest this and provide finance with some questions that you may have. I'm looking right at you, Linda.
I know you're looking at me. I'm thinking.
So what's the consensus of the council?
First meeting in June.
First meeting in June. So if we provide them